With the Eurozone economy barely expanding in the third quarter, the nascent recovery is looking extremely fragile. Here to discuss this with me is Charles Farrell. Charles, what did you take away from the numbers today?
Well, this is a very, 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 very slow recovery. The Eurozone popped out of recession in the second quarter. The third quarter numbers, 0.1% growth across the Eurozone. An unexpected contraction in France, minus 0.1%.
Very slow growth in Germany.
Very slow growth in Germany, up 0.3%. Germany's supposed to be the engine of economic activity in the Eurozone. When you combine that with the weak inflation numbers, 0.7% annually in October, high unemployment, high public debt, you get the picture of an economy that's just stalled. It's stuck. It's not going anywhere. Look, at least it's positive. That's about as good as we can say.
After 6 consecutive quarters of negative growth until the second quarter.
Indeed. So there is some sense that there is a turnaround, that at least the figure is pointed in the right direction. But it's clear that there are a lot of economic roadblocks that need to be removed before you see robust recovery.
How much is the shift away from the periphery, from the likes of Spain and Italy, for instance, now shifting toward the core? You've mentioned France and Germany. I mean, is the periphery really out of the woods yet?
It's too early to say the periphery is completely out of the woods. And now keep in mind, we don't have real numbers on Greece. They don't produce seasonally adjusted numbers for Greece, but Spain and Portugal, modest growth, 0.1, 0.2%. That is certainly better than the deep contractions they've had, but remember that a lot of their export market is the rest of Europe and the rest of the Eurozone. And if there is a stalled economy elsewhere in Europe, it's going to be that much harder for them to mount an export-led recovery.
And is it likely that the ECB will step forward to act at the next month's meeting?
Well, it's
given the surprise rate cut last week?
It's hard to say whether it's going to happen at the next month's meeting or later or never. But if you look at the markets are certainly anticipating that the ECB is going to do something. Equity markets are up across the board in Europe. In this sort of strange world we live in, that's a signal that they think that more stimulus is coming from the central bank. And if you look at Peter Pratt's interview with the Wall Street Journal yesterday, he sort of hinted in not very couched terms that the central bank might consider asset purchases, something that if you go back 3 months, 6 months, had been completely verboten.
Great, thank you very much indeed.
My pleasure.